Hey everybody, Ben Hart here. It's December 8th, 2023, 4:15 Friday afternoon. Winter's here early this year, as I'm sure everyone's noticed. I had big snowfall this week and a cold week overall, 15, -15, -16, and lots to cover today. Going to give you an update on what we saw in the markets in the world and just start to go through some of the slides. I am by myself today, so it looks like we will do that. So just from a week perspective, this was, if you watched last week, I was talking about most likely event to have an impact this week would have been Bank of Canada, certainly from a Canadian perspective. And so we saw the Bank of Canada do nothing on Wednesday as anticipated. And then out of that, some of the more important things is what did the minutes say? What did they say? How did they lean? Continues to look like they're going to do nothing. So if from our research, we said probably March, April-ish, we'll be thinking that cuts are probably coming in that backdrop. So give an update on a couple of the slides around why and how and what that looks like. The other, I'd say, material event this week would have been the jobs numbers that came out today. Arguably in line, certainly there's a lot of moving parts as there always is within the jobs data. So in line, a big chunk of those jobs were government, and the other material one was healthcare. As I noted in the daily, if you saw it today, I also mentioned that a big chunk of that was union workers resolving their strike, something in the neighborhood of 50,000 jobs. So with 188,000, 50,000 of those were people going back to work, jobs they already had. It's not really new employment, but that's what the data said. So as we come into next week, right now, we're looking at the U.S. Central Bank is meeting on Wednesday next week. So we'll be watching that. We'll give an update as we go through here. Other major thing happening in the world was the COP, which is the global energy conference just around reducing greenhouse gas emissions, methane, things like that. Some of the countries putting out big announcements around their goals and expectations. So should be more to come out on that this week. But otherwise, I will jump into the slides here now. All right, so there have been lots more Congress events than I've seen in a long time, but this one I thought was interesting and relevant. If you think about what's going on in the world, we had J.P. Morgan as well as the other senior leaders from the bank talking, and yesterday Jamie Dimon spoke about how crypto was only as a result of illegal activity, so on and so forth. If you add up the total that JP Morgan's paid in fines since 2008, it's something in the neighborhood of $50 billion. And this is just a snapshot of that. So I tend to always lean more towards pay attention to what they're doing versus pay attention to what they're saying. As I've noted multiple times on this recording, is that they have a system, blockchain system that's called Onyx. Onyx is the division within JP Morgan. Within Onyx, they have a layer 2 system called Quorum. That Quorum is built on Ethereum. So as Jamie says, something specifically about how he thinks crypto should be shut down. And on the other hand, the bank uses it for their blockchain technology. So I think pay attention to what they're doing as opposed to what they're saying is always more relevant. Okay, just trying to get on the next one here. There we go. All right, so this is a little snapshot of the jobs numbers. So this is U.S. non-farm payrolls. So we look at it, just the trend I think is more important than the absolute number. We continue to trend lower, slight uptick here, but based on the rest of the economic data that's happening in the system, we're going from more jobs to less jobs. That obviously is a result of multiple things where profitability in the bank or in the companies are squeezed. If you followed some of my charts this week, there's a fair amount that I discussed and talked about around the fact that a lot of companies are less healthy than they were 12 months ago. Right. Next is, so if we look at the kind of the reasons why the world and the economy is slowing, this is U.S. data with households facing record interest payments. So, we've gone from the easiest financial conditions we've faced in at least our lifetime, my lifetime, to the strictest financial conditions we've seen in a period of 18 months. And so there's massive pressure that's coming up from the bottom. And so you're seeing the economy slow, you're seeing housing start slow, you're seeing defaults rise, you're seeing unemployment rise. And so the economy is slowing, there's no doubt about it. And these are some of the reasons and around why it is. So just when we think about the markets and the economy, so last couple of weeks I've been starting to think about and talk about what bottoming looks like. What do we need to think about? How do we look around the corner and look forward? This is just a snapshot around the US and EFI leadership. And so when we look at it, we look at so US market be on top, Canadian markets middle, developed markets, ex North America, then emerging markets. And so, when we look at this and zoom back, intuitively, this makes sense, right? So, leadership out of the big cap names in the US and some of the other developed markets where Canada and emerging markets wouldn't have that. So, US dollar plays a major part in this. As the US dollar has been strong, that's actually been a benefit to their markets and economy. It's been a detriment to some other parts, including the Canadian market and emerging markets. And so if you do have a view that you look around the corner and you think emerging markets are still growing, and this could be an opportunity here. Certainly as I look at as jobs and companies start to move more and more away from China, they're still going into India and Vietnam and Taiwan, and there's still significant growth happening in those countries. So certainly opportunities are persisting, and it's just a matter of trying to look around the corner and see what that looks like. So I put out this chart multiple times, but I think it continues to be relevant and pertinent. As we worked our way through November, we had quite a significant move in bond yields lower, so prices went up through that backdrop. So if we just look at this one particular line item, which is the U.S., we look at the where it says the U.S. 30-year Treasury bond here. That's a look at, when I own the TLT or the long dated bond in the US, this is the type of thing that I expect if we go into recession materially, where interest rates fall in that backdrop. And this is starting to show you a picture of how it looks outside of the 1%. So I showed the 1% move where, say, the 30-year went from 4.2 to 3.2. You get about a 16% return. If that drops from 3.2 to 2.7, which I think is certainly probable and possible, that's a 30% capital appreciation in those long duration bonds. So, when you think about bonds, sometimes you see a 1% move, you think there's no way, like how is that going to go up in value? But because of the duration, the convexity, you get outsized returns from having this. So, bonds present, particularly in the government category and sovereign bonds in North America, and Germany and Japan present, I think, as good an opportunities we've seen in a long time. So I continue to watch this and think having exposure there presents significant opportunities for us. So as we look around the world, this is just I think about how do we continue to look at generating electricity in we'll say a clean and safe way. For those of you who remember Fukushima, as I'm sure many do, the world had a bit of a knee-jerk reaction in that period and just started closing nuclear power plants everywhere in the world. So you can fast forward today and obviously see that was the wrong decision historically, and many countries continue to charge on with reopening or starting ones. This is a snapshot of Poland that they have. 6 put together and ready to go, 6 nuclear power plants. If you look at some other places in the world, China is actually has nuclear powered ships that they've come out with. And so, I think this is a reasonable opportunity, and we need to consider and think about what it is and where it is. And, this is a reasonable solution to kind of reducing risk from the exposure and the reliability that we have on natural gas coming out of Russia and Europe right now. So I see this and I look a little bit, and this is just from the thinking around how do markets and economy react to a recession. And so, I've talked about this with multiple different people and places, and presented at a tech company about a week and a half ago, just giving them updates. And there's a soft landing that we see ahead. No matter what you think, if we have a soft landing or not, economic data is such to where the economy is slowing and inflation is slowing. And so with those two backdrops, you get certainly recessionary type numbers projected for the next couple of quarters. And so from the timing of that, what do you do? And so when I think about it from the perspective of what does it mean for assets, and so what it's meant so far is we've seen bond yields go up, and so that's a signal that maybe the economy continues to slow faster than expected. And so what happens next from there? Typically you get kind of a contraction in growth, and so that would potentially bring some stock prices down, particularly on the growthier side. But more of the defensive utilities names, pipelines, those things present opportunities, and likely they, at least historically, have bottomed when yields have peaked. And so I think we've reached that point in passing, going at the other side. So this is a visual for both the TSX and the S&P 500, and just thinking about how those two narratives play out as the economy slows. So I just have two more to hit on, and I've talked a little bit about Bitcoin recently, but I think more than anything, and I did put this into the daily, this is kind of constant thinking about risk reward. And so when I have this discussion with clients, with colleagues, with compliance, I'm always thinking around what's the risk reward with owning it, what's the risk reward with not owning it. And so Sharpe ratio tends to be kind of the best gauge from a risk adjusted perspective to say, what's the risk adjusted return. And so when we look at this, you'd probably think that Bitcoin would be way down along the bottom. You're taking a huge amount of risk for not so much upside, when in fact it's the opposite. You're taking actually quite a bit less risk for the return that is presented to it. So this is a good visual. Sharpe ratio is a great way to decide risk reward when you're investing in something. And just as we prepare and start to think about next week, the big event next week in the US is certainly, and the world, because the US tends to lead a lot of the information that's happening in the world, is what's going to happen with interest rates. And so if you look here, this shows you the Fed Watch tool, which gives you the predictor for what's going to happen next week from rates perspective. And right now we're at a 98.5% chance of a rate hold. And if we fast forward to March, right now it's about a 40% chance they're going to cut in March of next year. So a lot of what they say next week is going to be important to watch and pay attention to. December is always a choppy month as people go into tax loss selling and changes, and liquidity gets lower and lower as the more and more we approach Christmas and that last week after Christmas. So lots to pay attention to, but right now we're looking at no interest rate increases in the US next week, and we'll be watching to see what they have to say. So just going to shoot myself over onto the main screen here before we wrap up. So about 4:30 now. So thanks everybody for listening and attending. Really want to give an update on just what I thought and what I saw here. Continues to be lots of opportunities and potential. The greed factor has moved up a little bit here, where we've had a nice return over the last 6 weeks, and so we'll be looking at potentially taking some profits in certain areas. I did trim a little bit of the exposure to Bitcoin for the clients that own it, reduced that, took some profits off the table there because we've had a nice run so far this year. Anyone has any questions, want to discuss tax loss selling before the end of the year, anything else, please feel free to give me a call. Or shoot us a quick email and book a meeting. But as always, thanks everybody. Appreciate your time, appreciate your trust, and have a great day.